Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. What is the WA Cares Fund? Well, the WA Cares Fund, formerly known as the Washington State Long-Term Care Trust Act, is the first government-run long-term care insurance program. It was signed into law in 2019. The program is funded through a payroll deduction of 58 cents for every $100 of W-2 income. The first payroll deductions began in July 2023. The first benefits will be paid to eligible participants beginning July of 2026. The program's benefit is $36,500, and that's periodically adjusted for inflation. The $36,500 is the maximum amount of benefit payable for life, not per year. The program is not intended to cover the full cost of care, but its intention is to provide a small amount of benefits to decrease dependency on Medicaid. Now, the program is not universal. It does not cover those who are already retired. It does not cover those who are already disabled and not able to work. And it does not cover stay-at-home parents. Now, in this episode and the next, I'm going to talk about what the state of Washington did right, what the state of Washington did wrong, and how the Washington Long-Term Care Trust Act, how the WA Cares Fund compares with private long-term care insurance. There are similarities and there are differences. So first, what did Washington State do right and wrong? The state of Washington did a lot of things right when they created this program. The program has a modest payroll deduction suitable for the modest amount of benefits. The program is actuarially sound. Most workers will pay into the fund for 10 years before they will be able to qualify for any benefits. The benefits are flexible, allowing many different care settings as well as many different care providers, even family members in certain cases. The program provides first dollar benefits. In other words, there's no deductible. Other than the time it takes to file a claim with the state, there's no deductible. Your benefits are paid right away. After its initial passage, the legislatures in Washington State improved the law in 2020, 2021, and 2022 after they got a lot of feedback from constituents and stakeholders. They allowed citizens who already own private long-term care insurance a one-time opt-out from the program. The state of Washington did only one thing wrong. They underestimated how many people would buy private long-term care insurance and opt out of the program. Initially, the actuaries hired by the state estimated that 105,000 workers would buy private long-term care insurance and opt out of the program. In reality, over 480,000 of the highest paid workers in the state bought private long-term care insurance and opted out of the state's program. They opted out of the WA Cares Fund. Now, for highly compensated workers who were healthy enough, a small private long-term care insurance policy was a much better deal than paying the state 0.58% of all their W-2 earnings. Now, let's talk about two ways that the Washington Cares Fund and private long-term care insurance are nearly identical. The Washington Cares Fund and private long-term care insurance are nearly identical in two very important ways. First of all, comprehensive benefits. Both the WA Cares Fund and private long-term care insurance policies offer comprehensive benefits: care at home, home modifications, adult daycare, care in assisted living facilities, and of course, nursing home care. About 60% of private long-term care insurance claims start or end at home. This is what happened with my mother-in-law. Her first couple of months of care were at home. She then transitioned to an assisted living facility for a few years, and then she moved into our home after COVID. And her long-term care insurance policy covered her through that entire continuum of care. Her policy even paid for our bathroom to be modified so she could have a walk-in shower, as well as several grab bars throughout the house. And the Walk Cares Fund can also pay for similar home modifications and similar benefits. The second way that the Walk Cares Fund and private long-term care insurance are nearly identical is the reserve requirements. Adequate reserves are required to be set aside to pay all future claims. Both the Walk Cares Fund and private long-term care insurance companies must set aside adequate reserves to pay all future claims. There's been a lot of political rhetoric about the solvency of the Walk Cares Fund, but the law that created the Walk Cares Fund requires that the fund be solvent and actuarially sound. If necessary, the trustees will have to lower the benefits in the future in order to keep the fund solvent. Private long-term care insurance companies also must fully fund their reserves to pay all future claims. Now, there are 6 ways that the Walk Cares Fund is better than private long-term care insurance. And I'm an insurance agent. I've been specializing in long-term care insurance since 1995. But I'll say it again, there are 6 ways that the Washington Cares Fund is better than private long-term care insurance. First off, the Washington Cares Fund is better than private long-term care insurance in that it has no underwriting. The hardest part about buying private long-term care insurance is the underwriting. You cannot buy private long-term care insurance just because you want to buy it. You must be healthy enough to qualify for private long-term care insurance. So the biggest advantage of the Walk Cares Fund is that there's no medical underwriting. Everyone employed in the state of Washington can participate in the program. The second way that the Walk Cares Fund is better than private long-term care insurance is that no premiums are required to be paid once you've retired or when you're unemployed. You only pay the premiums while you are working. When you retire, you no longer pay any premiums. If you're unemployed, you don't have to pay any premiums. You only pay the premium when you are working. With most private long-term care insurance policies, the premiums must be paid as long as you live, even after you retire. There are a few private long-term care insurance policies where you only need to pay the premiums for a fixed number of years, but those policies are the exception. A third way that the Walk Cares Fund is better than most private long-term care insurance policies is that it will pay for family caregivers. Most private long-term care insurance policies will not pay for a family member to care for you. But in certain circumstances, the Walk Cares Fund will pay a family member to provide care for you. The fourth way that the Walk Cares Fund is better than private long-term care insurance is that there's no daily cap, only a lifetime cap. Every private long-term care insurance policy has a daily cap. It's the most it'll pay for each day that you need care, or a monthly cap, the most that it'll pay for each month that you need care. The Walk Cares Fund has no daily cap. It has no monthly cap. It only has a lifetime cap. The lifetime cap is the most the policy will pay in benefits over your lifetime. The Walk Cares Fund has a lifetime cap of $36,500, which will be periodically adjusted for inflation. The fifth way that the Walk Cares Fund is better is that the payroll deduction of 0.58% is the same regardless of gender. With most, not all, but with most private long-term care insurance policies, they charge different rates based on gender. Men usually pay less for private long-term care insurance than women pay because men are more likely to just die suddenly without needing any care. Women tend to live longer and are more likely to need care than men. The sixth way that the Walk Cares Fund is better than private long-term care insurance is that the rates are the same regardless of age. Every employed person in the state pays the same rate regardless of their age. Private long-term care insurance policies determine your premium based on the age you are when you apply for your policy. The younger you are when you apply for a private long-term care insurance policy, the lower your premium. The older you are when you apply, the higher your premium will be. To learn more and to get a quote, go to my website, ltcshop.com, and click on Policy Finder. Answer a few quick questions, and within one business day, we'll send you the details. Thanks.